cook with Crisco, but that is neither here nor there. Okay, so we're about to go ahead and dive into it. So what you guys currently see in front of your face is a trade I did that I actually called out earlier today around the time that the market opened, which is on NZD CAD, and we're looking for a long opportunity. But before we do that, I want to be able to revisit a trade I did that we are currently still, well, I don't know about y'all, but I'm currently still holding. So Gbp Jpy is one of the trade I did that I called out from last week. This trade I did actually, we actually took this trade I did twice. So personally, it's rare for me. I'm not necessarily the biggest re-entry kind of person. I'm gonna be real. Just from back testing, I usually feel more comfortable taking a trade one time, and then whenever I get my break even hit, I kind of just move on from it. But it was too attractive to be able to pass up. So our initial setup was this over here. The reason why I keep these on here and I don't erase them is because I make YouTube videos breaking down the setup. So like I said, I want my YouTube channel to be for everybody to be able to go back, rewatch the information to where it's not like you have to absorb everything on the live Zoom call. You can always go back and rewatch it, pause it, take notes, do whatever you need to do. So as of right now, I'm not going to actually break back down the setup because I've already broken down the setup 2 to 3 times last week. And like I said, I'll make a YouTube video for it sometime later this week. But ultimately, the trade did end up dropping for about 188 pips. It was about close to a 5-to-1 overall risk to reward. The original setup was almost an 8-to-1. And as of right now, we are currently up about 80 pips. So personally, I forgot where I told y'all to move y'all stop loss as far as break even. But if you're on the call, I'll go ahead and update it in the chat like once I hop off. I don't know why I put this here. I just put my stop loss at the first take profit. So that'll basically be to where if your break even gets hit, it'll take you out at 60 pips in profit because we've already hit TP1 at the green line, TP2 at the second green line. And at this point, we've already taken partials a couple of times, and we just gonna let the trade either kick us out or hopefully it keeps dropping. Either way, I'm not really tripping because we already got paid. Okay. So that's going to be Gbp Jpy. And we do actually have a few different setups I want to go over. Wall Street Ray actually did the due diligence of going over one of the setups that I'm interested in, which is Euro JPY, which if any of you guys were on my call from Friday, in the Zoom call that I have recorded on my YouTube channel, I actually broke that down extensively. And I gave that to the people that were on the call Friday. I ended up saying delete it because it didn't activate, but it looks like we're going to have the opportunity to be able to take it again, assuming that it pushes to our entry. So first and foremost, let's actually go over NZD CAD. As you guys can see, it's looking like it's starting to push in our favor, but as traders, we're never going to get too excited until I don't get excited until I can adjust my stop loss to break even. Anything that happens in between then honestly means absolutely nothing. Okay. So the one thing I want to be able to do is pull up a different data feed so that I can actually break down to you guys without actually having to touch my chart. All right, cool. So let me go ahead and get rid of that. All right, perfect. So in the grand scheme of things, as you guys will find out time and time again, everybody has their own style of trading. For me personally, I always like to repeat, for my back testing, I ended up finding out my favorite time frame personally is going to be the 1 hour. So it's a little different from how a lot of other people trade. A lot of other people trade, top down analysis and things like that. Me personally, like I said, the 1 hour works perfectly fine for me. So I can get the majority of what I need to absorb from the market from the 1 hour. And then, I start working my way up different time frames if I find something that I like. So we're going to go ahead and break this down. So I have a few different confirmations, right? I pretty much only have 4 overall confirmations, right? I'm going to just go ahead and break this down. This is what works for me. So I like to be able to identify the trend. Okay. So first thing I like to do is identify the overall trend. I like to be able to determine my personal bias, which means what direction am I going to take it in? Okay. So just because I determine it's an uptrend doesn't guarantee that I'm going to take a buy. I might take a counter trend trade and look for a sell, but that's going to be my personal bias. And then finally, I want to see if I can find any type of divergence as well as, I guess I can label it momentum weakness, right? So these are basically the 4 confirmations that I look for in a nutshell. That's basically it. Once I've determined these 4 confirmations, I'm pretty much looking to see if there's a potential entry. And then from there, we go look to see if we can pinpoint an exact area. And that's how you guys get your buy limits and sell limits. Okay. So trend, the bias as far as the direction I'm going to take it in. Do I have divergence? And if the momentum is weakening, right? So let's go ahead and dive into it. So this is pretty straightforward. I really don't have to do too much analysis on this. This is obviously a blatant downtrend. Okay. There's not really if, ands, or buts about it. This is obviously a downtrend. How do I know that? What you guys can clearly see, right, is that the market impulse move down, right, retraces up, another impulse move down, retraces up, another impulse move down, right? So this clearly is going to be a downtrend, okay? All you have to do is just, it's for the most part common sense. If you were to really show anybody this chart, overall, it's going down. Now, that was pretty straightforward, okay? So just like that, I understand what is the overall trend. It's a downtrend, right? Now I got to ask myself, okay, remember what I said. Now I need to figure out my bias. Am I going to take a long or am I going to take a short? Now, if you're a new person, I'm going to be honest with you. The whole corny line, the trend is your friend, that's accurate, right? If you're new and you don't have that much experience in the market, I'm not saying you got to stay away from counter trend trades altogether, but you're probably less likely to be successful taking them just based off the fact that it's hard to, predict the top and a bottom if you've not been in the market that long, okay? But for me, I've been trading for, 2+ years. So I have enough experience where I feel comfortable doing so. So for me, I'm actually going to be looking for a long, and I'm going to tell you guys why. So there's something that I actually learned from John Dollery. I don't know if this is a technical term, but I call it 3 drives. It's called like 3 drives. I think that's what it's called. This is not actually where I want to put this. So one thing I want to be able to show you guys, right, is whenever the market gives you 3 pushes in a certain direction, a lot of times, right, there's a possibility that you could get a strong reversal, okay? So this is 1 drive down. This is a 2nd drive down. This is a 3rd drive down. A lot of times in these instances, you're going to discover your divergence that I'm referencing. So I personally use the TDI myself, but the TDI is kind of confusing to explain to a new person. So I would rather prefer to use the RSI. Now, remember, the first 2 confirmations are overall trend and the bias, right? So the overall trend is a downtrend. My personal bias is going to be a long, which is a buy, right? Now I'm trying to see if I can see the momentum weakening and if I can determine divergence. Well, I'm gonna go ahead and tell you guys right off rip, I can already see divergence and I'm going to show you exactly where. So the easiest way for me to be able to show you guys divergence is I like to be able to change it from the candle chart to the line chart, okay? So I'm gonna go ahead and select that. Now what you guys see is the RSI matches the chart above. Now divergence is pretty simple, okay? Divergence overall is whenever you have the market going in one direction and the indicator that you're utilizing to determine or detect the divergence is doing the complete opposite. So obviously, if this is going down, okay, I would like to see the RSI going the opposite direction, which is going up. And sure enough, or like how they say from the country, sure enough, right? This is divergence, ladies and gentlemen. Now, I'm gonna be honest with you. A lot of times whenever I show you guys divergence, it's not from such a long range. It's usually like, it's usually like a shorter range, maybe from like here to here, here to here. But this is still valid. Now, don't get it twisted. Sometimes you can be reaching whenever you're trying to detect divergence from such a long distance, okay? So this is going to be accurate because as I mentioned before, these are 3 drives. So 3 drives up or 3 drives down a lot of times symbolizes divergence, right? Like I said, I learned that from John Dollery. Shout out to Steady. If you guys do not have a pro pack, you are asleep, okay? Oh, bad. Shout out to my boy Kevin on the call, yeah. Oh, yeah, shit. I had this marked up since last week, bro. I ain't gonna even lie. I had this marked up for at least a good week and a half or so. So this divergence is what gave me the confidence. So a lot of times, look, I'm gonna show you guys another example, right? If you guys get on my calls enough, you're gonna see, look, I still got divergence marked up from over here. Look at this, right? Look at this. The market is going up. The market is going down. It is not by mistake you got such a dramatic impulsive move to the downside, okay? Divergence is my best friend. And this is really going to be one of the main keys to success in a lot of my setups, especially the counter trend trades, okay? So since I determined the divergence, you're like, okay, Tyree, well, your final confirmation, you said something about momentum weakening. I got you. What do I mean by that? The dope thing about the RSI is you don't have to adjust any of the settings. You can leave it on default. That means whenever you add the indicator, the only thing that you should be changing is the color based on what color you want to see. I just left it at default, okay? So whenever this white line goes outside of the purple box, that means that the momentum in that direction is weakening. It doesn't mean randomly hop in for a buy or a sell. It just means that maybe you can start looking for an opportunity to possibly take it in the opposite direction. Okay, possibly. It means, you know, get ready. If it starts showing you more signs, it might be time. It doesn't mean as soon as it gets outside the box, just sell it. It doesn't mean as soon as it gets outside the box, just buy it. But it means that the market could be weakening. So it is not by mistake that here, where one of these drives, it came outside the box, that's the momentum weakening. Here, the second time, it gave us a second drive, right? So 1 drive, 2 drive, 3 drives. Each one of these drives is showing us that the momentum is getting weaker, okay? On top of that, we got all this right here. So all of this is symbols that the downside momentum is getting weaker, okay? Obviously, you guys saw right here, the market actually gave us a very strong, you know, quote unquote retracement. It did break this structure, but you got to remember, this is still technically a downtrend. So you have to keep all that in perspective. A break of structure and a downtrend may not be the same concept, okay, as if you're trading in an uptrend. So even though this was a valid break of structure, you're still trading in a downtrend. So really, this technically was just simply a really deep retracement, as you saw, because it kept dropping. So I've now gotten my 4 confirmations. The trend is down, right? I got the divergence. My bias is longs or buys. And I also see that the momentum is weakening to the downside, which is also another reason why I'm looking for a buying opportunity. So I'm going to go ahead and erase all that, right? Now, I'm going to show you guys basically the sauce for me, right? Now, the reason why I'm going to start actually teaching you guys like my sauce on the TDI. So for me, the dope thing about the TDI is this yellow line, right, represents the same concept that on the RSI as the white line going outside the purple box. So this green line is similar to this white line. So if you see this green line, similar to the white line, okay? Now, the other thing I like to be able to see is what you guys might not know is on the TDI, whenever this green line crosses the yellow line, that is a strong indication of momentum shifting. Shout out to Tyrone from DeLorean. If y'all want to learn how to use the TDI, go tap into Tyrone's favorite sessions. I'm going to just leave it at that. By far, in my opinion, the greatest indicator in the game. It is not even close, okay? I'll definitely teach you guys, you know, all the sauce that I use this along with smart money, because I'm be honest, TDI and smart money is by far why I've been so consistent. I could not do either one without the other. I'm just being honest with you, okay? So what I ended up noticing was, right, on top of the divergence, we had what's called a TDI shift, which is going to be when the green line crosses the yellow. At the same time, you guys see that the market gave an incredibly strong impulsive move, which also left what is called an imbalance and or inefficiency, okay? So all these things are going to go in tune to what I'm going to be looking for. Now, I'm going to be honest with you guys. I've literally shown you guys all of my confirmations. You want to know what the final thing I'm finna do is? Now I'm finna start looking for an entry. The way that I look for an entry is pretty straightforward. Now, if you guys have noticed, rarely do I go below the 1 hour time frame when I'm looking for an entry. Okay, I might refine an entry, but you guys are rarely going to see me dipping below this, right? Now, that's what works for me. I used to get clapped a lot and have my stop loss hit a lot trying to look for these lower time frame structures. So I ended up becoming way more successful trading off the higher time frame, which is why you guys see what you're not going to see often. I literally have every hourly time frame up to the 12-hour. Trust me, I know that's rare. Most people do not have that, but this is what works for me. And I'm going to show you why I ended up doing this. And all this literally came from, as I keep repeating, back testing. So I want to be able to find an engulfing candle and or institutional candle, which is basically going to be a bullish one. So I want to be able to find something that looks like this. This is basically going to be my trigger candle, my entry candle. This is how I want to be able to determine where exactly I'm going to get into the market and if it's a good idea. If I do not see a bullish engulfing candle, regardless of all these confirmations that I've given you, I'm not going to take the trade, okay? And definitely make sure you guys stay on the entire call, because there's actually going to be a few setups you guys are going to get tonight. This is definitely not the only one. So definitely make sure y'all get some Red Bull or Monster, whatever y'all need, okay? So all I'm simply going to do is I'm going to start working my way up on these time frames until I find, listen to me close, the biggest engulfing candle on the highest time frame. I'm going to repeat it one more time. I want to find the biggest engulfing candle on the highest time frame. So technically this is an engulfing candle, but this is, you know, this is like a BS one. This is like almost no body on this, but it's technically an engulfing candle. That's not valid for me though. So I'm gonna go to the 2 hour, okay? right? We got a candle right here. But remember what I said, guys. I want to find the biggest candle on the highest time frame. Okay. Gonna go to the 3 hour. All right. Gonna go to the 4 hour. Right. Gonna go to the 5 hour. Dun 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 dun. We found it, ladies and gentlemen. So we've officially found the biggest engulfing candle on the highest time frame. So by definition, what I just showed you guys is what I'm looking for. I want to find the biggest body on the highest time frame. And this is where I'm going to now start looking for my entry. Okay. So one thing I want to be able to show you guys, I want you to imprint this in your brain. The best engulfing candles are the ones that almost have no wick on the body of the smaller of the two candles, right? So remember, moving forward, a lot of these candles are usually going to have some type of wick. The candles that have basically no wick, which I'm going to show you guys in another example, because I'm looking for, I'm actually looking for a short on GU. GU looks extremely similar to this. So we're going to dive into that tonight. Okay. So my favorite candles are the candles that look like this, damn near no wick, like no wick. These are going to be like the best candles I have like the best trades from. So this might be one of those trades. Like I said, stop loss could get hit. I don't know. Make sure you don't over leverage, but I'm just saying from previous experience, these are going to be some of my most successful setups, right? Now, what is the next thing that I'm going to do? I like to be able to, from this candle, the first thing I want to do is I want to mark up the 50% of that candle. Now, for anybody that's new, the 50% is going to represent the equilibrium, the sensitive spot, the sweet spot, right? It's going to give you the best entry, the best risk to reward, the smallest stop loss, the highest pip gain. But one thing I want to be able to teach you guys moving forward, the 50% is not always going to get activated, right? It's a lot of setups that I've shown you guys that 50% does not get touched. So what does that mean? If you're just automatically like, oh, okay, I'm gonna just, put my long position here. Just like in this example, say for instance, if this trade never comes back, you would have missed the entire setup, okay? Now, yeah, maybe the trade does pull back, come in, hit it. That's cool. I don't go off of what could happen. I go off of what I've seen happen more times than not. What I've seen happen more times than not is that the 50% doesn't get hit a lot. A lot of times the market just dips into the candle and it takes off, okay? I've missed out on a lot of opportunities by just strictly going for the 50%. So what I started doing was I started teaching you guys to mark up an entry zone, okay? So you can actually mark up an entry zone from the opening of the candle to the 50%. Now you actually have something to work with, okay? But remember, I send out pending orders, buy limits and sell limits. You rarely see me send out a market execution. So it's like, okay, well, you're obviously not sending out a zone. You're sending out an exact entry. So how do you find your entry? I'm glad you asked that question. You want to know the next thing I'm finna utilize? The most utilized tool in all of trading, right? Stock market, crypto market, Forex market. The Fibonacci that y'all are more familiar with that actually has, like the 61.8, the 88.6. Voila. No, that's not it. That's a harmonic one. Bam. Right. Now, I'm about to put y'all onto some sauce, right? It took me a while to be able to get to the point that I'm about to explain this and make it sound so simple. Actually, they called out a DeLorean on my phone. Let me see if they got anything worth looking at. Give me 1 second. Shout out to the products, man. Don't think your boy's still not using the product. Don't get it twisted. And that's ugly. Okay, cool. Back to it. So now that I've actually drawn this entry zone, guys, what I want to be able to look for is I want to use an entry based off of one of these fib levels. So the way that I break it down, I'm going to take an entry based off of a fib level that is within my entry zone that I've now drawn from the opening to the 50%. That is how I find my exact entry. So once again, the biggest engulfing candle on the highest time frame, I'll mark up the 50%. Even though I'm not entering out the 50%, I just want to know where it is at all times. And then whenever I draw my entry zone, I'm going to use one of the fib levels that is within my entry zone. Okay. Now, personally, I like using the fib level that's closest to the opening. Even though, the deeper retracement would be preferred. Once again, everything I do is for a reason. It's been a lot of times to where the lower fib, just like the 50%, does not activate. So what I learned is I'm okay with having a more aggressive entry and a slightly bigger stop loss, because if I can get in the trade, I'd rather take a little drawdown, but be in the trade than have no drawdown, but miss the whole trade, if you feel what I'm saying. So I feel like some people get a little too cute with a stop loss or with the entry, and you miss the whole damn setup. I don't give a damn about being cute, okay? That's why I tell you guys, make sure you define what is your maximum stop loss. Me personally, I feel like there are a lot of traders that don't define their maximum stop loss. My maximum stop loss is 40 pips. So anything within 40 pips, I'm not tripping at all. That's perfect. 33 pips, 31 pips, 32 pips, 28, 29, 16, 15. Anything under 40 is valid. So that's why I'm able to take an entry so confidently, because if it fits within my stop loss, I don't give a damn where the entry is. I just want to be able to have the trade get filled. Okay. So now that I've broken this down on the other chart, let's go back to the chart that I actually took the trade from. Now, what I want to break down is, notice how I took the trade exactly off the 71%. Why? Because this is the closest fib level to the opening of the candle. Okay. Yeah, I could have taken a 78%, but guess what? If this trade never comes back, once again, I told you the 50% does not have to be touched for the trade to be valid. All the trade has to do is technically just touch this candle. It doesn't actually have to retrace to the 50%. So what is my stop loss? 32 pips. I'm cool with that. So I'm like, okay, I'm going to take the trade. And ladies and gentlemen, just like that, that's literally why I took the setup. Now, me personally, I don't necessarily take a whole lot of time explaining my take profits, just because I feel like that's just going to take so much more additional time. But what I will explain is my first target. Now, the dope thing about imbalances, right? I personally don't like to take entries off of imbalances, but I love targeting imbalances as a take profit. Okay. And that's just me. It is a lot of people that are successful taking entries off of imbalances. It did not work out well for me. So I was just like, let me just stick to engulfing candles. So this imbalance, right? I found this 30-minute imbalance, and this is where I'm going to put my first target. So if this market comes up, hits this imbalance, and then reverses, at least I made money versus me trying to hold, right? To the what word am I looking for? To the high of this retracement move. And then I just don't take any profit, and then I just let the market reverse and hit my break even. So that's one thing I started noticing too. You have to be just as good with your entry as you are with your take profit, because you'll mess around and get a good entry, hold the trade, don't actually take profit at a decent level, and then just have the trade reverse and either hit your stop loss because you left your entry open, or it's going to hit your break even and you're going to be mad because you didn't take any profit. So definitely make sure, as you guys are working on your entries, make sure you're working on your take profits also from back testing. Okay. Drop a 1 in the chat if you guys are still with me. Okay. I know I talk a lot, might be a little all over the place, but like I said, I'm just breaking down to you guys how I trade, and how I've been so successful. So if you guys have been following, my trades over the past few weeks, we've been doing some disgusting things. I'm gonna be honest with you. Okay. We've been doing some pretty disgusting things, right? Now that's gonna be NZD CAD. Okay. So as you guys see right now, like I said, there's no excitement attached. I'm not gonna, feel any kind of way because we're not in break even area. We're not at take profit. It's whatever at this point. Okay. It's reacting, but it can also reacting reverse on this. So we're up about 13 pips. If y'all are in the trade, shout out to y'all. We go let it rock out, and we go from there. Right. The other thing I want to teach anybody that's currently like a smart money trader on the call, which I know we have a few. I know it's a lot of people that are probably on here like, bro, you probably could have went for this. I could have. But what I started noticing was the retracement that you want is not always the retracement that you're going to get. I'm going to repeat that one more time. The retracement that you want is not always the retracement you're going to get, which is why I repeated earlier. I'm okay with taking a more aggressive entry, because from back testing, trying to get a retracement this deep, a lot of times it just might not happen and you just miss out on the whole setup. So my risk to reward is still good. I still got an overall 7.5 to 1, right? And my stop loss is within the range that I like. So like I said, everything works for whoever it works for. And this is what works for me. So we're going to go ahead and move on. That's NZD CAD. Now we're about to get to the rest of the juicy stuff. Okay. Are any of these close? Oh, okay. This is what Wall Street is talking about. So we definitely gonna talk about that. Y'all gonna like this one. Wall Street, Kevin and Butters, y'all gonna like this one. I'm gonna just talk about this one because I know y'all probably didn't look at this one. I told Wall Street and Kevin, any of the pairs that people run away from, right? I got y'all. Y'all can already see what I'm looking at. I ain't even really got to talk too much about it. This is Euro Chef, 25-minute, and needless to say, this looks absolutely beautiful. I'm not gonna lie to you. So we're gonna go ahead and break this one down. And I also got GBP USD. Yeah, like I told y'all, we got quite a few setups tonight, so y'all just be patient. This one don't look like it's gonna activate tonight, so I'm gonna be real. I don't like breaking down setups if I don't actually send it the same day, because I can save this for tomorrow. So Wall Street rate, Kevin, if y'all want to, go mark this up yourself, find y'all's own entry and stuff like that, I would go look at Euro Chef 25-minute. And yeah, y'all can already see what I'm looking at. So definitely go take advantage of that, y'all. But I would definitely be calling this out sometime tomorrow, assuming that it keeps pushing up. But it doesn't look like as of right now, it might not activate today. So like I said, I don't like talking about setups if I'm not going to call it out, or I don't think I'm going to call it out today. So let's just focus on what I think I'm going to call out today. This can be good too. I don't think that's going to happen today either. So GBP USD and Euro JPY is what we're going to focus on. Excuse me. Let's see. Which one should I talk about first? Let's talk about GU, because Wall Street Ray did a really good job of talking about EJ. So I'll save that one for last, and we're going to go ahead and dive into GU. Now, let's start from scratch like how I did before. So we're going to do GBP USD, Owanda. And then we're going to start off on that 1 hour time frame. Let me make sure, because sometimes these broker fees be looking slightly different. Okay, that's cool. It's relatively the same. That's fine. Okay. 1 hour time frame. All right. So once again, guys, I want to look for my trend. I want to determine my bias. I want to see if I have divergence, and I want to see if the momentum is weakening. Okay. So I'm gonna be honest with you guys. This is once again a downtrend. How do I know that? Right. This is a little cleaner of a downtrend because we got, we got structure break. Okay. Break of structure. Market kept dropping. Right. This high never came back to be broken. And then ultimately what it looks like is the market is giving us a retracement. So if I were to take this fib from the high to the low, okay, it looks as though not only is the market reacting in a imbalance area, okay, as you guys can see this imbalance over here, this is also between the 88 and the 78.6 fib. So we got our break of structure. This high was never violated. If it is a valid downtrend, which we're assuming from this break of structure, then this would be perceived to be our retracement to continue dropping. And that retracement is giving us the deepest retracement in the fib zone. On top of that, it is partnered with imbalance over here. So I like that a lot. Okay, I like that a lot. Now, we've determined the trend. We've determined the bias. It's a downtrend. I'm looking to take a short or a sell. Now, what do we want to look for? Momentum weakening and divergence, okay? So let's go ahead, pull up that RSI, okay? Now, what you guys can see is going to be divergence, right? I can already see it right here. That's going down, okay? In the same instance that this is still going up. Where is this at? From here to here, okay? Basically like right there. Now, as I said, one of my main, I guess, confirmations to determine if the divergence is valid is you usually have immediately following some sort of strong impulsive move, which, as you guys can see, it was a little delayed, right? Came down, pulled back up, and ultimately ended up giving us that very aggressive drop, as you can see also happened on the RSI, right? Now, momentum weakening. I mean, that was in the same instance that we got the divergence, right? Notice how the momentum started weakening here. But as I said, you don't just randomly hop in for a sell whenever you see this come outside the purple box, because guess what? Your stop loss would have been hit in two separate instances, here and here. But the market was priming you to be like, yo, Tyree, I'm not ready to sell off yet, but look, get ready, right? I'm giving you telltale signs that I'm getting weaker, okay? And ultimately, it confirmed it by giving us this drop, which actually gave us another break of structure, right here. And ultimately, what do we want to see? Some sort of retracement back into this area to then give us that continuation. So literally, think about, like, this is really how fast I'll be going through my setups. All this detail I obviously don't have to do because I'm verbally explaining it. In my head, I'll be marking these charts up fast. So just like that, I've already gone through all of my personal confirmations. Like, I don't need like a whole bunch of confirmations. My trading style is pretty similar, okay? We got our break of structure here, okay? This high was set. The market did not come back and invalidate this high. Okay. The market did not come back and invalidate this high. So as far as I'm concerned, and in simple terms, even without using my style, like a simple trader could have just fibbed it like this, and you could have just, you know what I'm saying, look for it in simple terms, like on some simple stuff. You could have looked for something like this. Bam. Now, obviously, you know, my technique's a little cuter than that. You feel me? Now, what I'm finna do is the same thing I just showed you guys. What did I just say? I'm finna look for an entry. So what am I finna do? I'm finna work my way from the 1 hour, possibly max it out at the 12, and I want to find the biggest engulfing candle on the highest time frame. That's it. That's literally it. So 2 hour, right? We can start off from up here. That's one. Obviously, it's relatively small. 3 hour, that's one. 4 hour, that's one. 5 hour, 6 hour, 7 hour, 8 hour, getting a little bigger. Okay, okay, okay. 9 hour, 10 hour, 11 hour, 12 hour. I'm gonna be real with y'all. I know y'all don't really know nobody marking up no damn chart off a 12-hour time frame. Tyree does though. You feel me? Tyree does though. Now, like anything else, this is the Onda broker. So I really want to be able to show y'all this candle. Remember what I just told you guys. The candles with little to no wick are the best candles. This one has little to no wick, but the one off of the FXCM, which is why I actually marked it off. Look at this. I want y'all to imprint this in your brain. The engulfing candles with little to no wick. These are the gems, I swear. These are the gems. Look for these, appreciate these, love these, take advantage of these, right? Little to no wick, okay? Now, going back to this. Once again, what I'm finna do is very, very simple, very, very straightforward, okay? I'm simply about to start off with the 50%, right? Just like so. Because like I said, I'm not necessarily just going to automatically enter off the 50%, but visually, I always want to know where it is, okay? So I got the 50% marked up of this 12-hour candle. And I mean, technically, this is the pure definition of the biggest candle in the highest time frame, because the 12 hours is a big ass damn time frame, right? So next thing I'm finna do is I'm finna go take my fib from high, right, to low. Okay, if I draw my entry zone to give you guys a visual from the opening to the 50%, remember what I said? I want to be able to use one of the fib levels that is within my entry zone. So once again, they give us 2 different fib levels. Okay, you guys can do whatever you want to do. As I said before, I'm going to use the fib level closest to the entry, but like I said, it has to give me a maximum of 40 pips stop loss. So say for instance, I use the 61.8 and the stop loss is bigger than 40 pips. Guess what I would do? I would literally just move my entry to the next fib level. See how simple that is? So simple. It's so simple. So now that I've actually marked this up, we can go back to the actual chart, and now y'all can see how I actually got it looking the way it looks. Stop loss, 37 pips. Not tripping. Now, you guys are seeing examples where I have smaller stop losses. Some of my stop losses are going to be bigger, right? For example, the trade that we took last week on Gbp Jpy, 2 different examples of exactly what I'm saying, right? The first setup had a 16 pip stop. The second one had a 39 pip stop. It just depends on what the setup is showing me, right? I'm one of those individuals, like I said, whenever I determine that my maximum stop loss is 40 pips, I understand I'm not always going to get a 16 pip stop loss, but if I see the opportunity and it makes sense, I'm going to take advantage of it. So basically on Euro JPY that we're going to break down, as you guys can see, this is an example of one of those smaller stop losses that I can use. It's only 15 pips, but it's based off of a specific reason. Okay. So this stop loss for GU, I'm actually going to go ahead and mark this up right now, so you guys actually see how I look for my take profits in real time. So this is going to be a 37 pip stop. We already got our entry, so everything already looks good. I've already pretty much looked through this. I didn't see any. Yeah. All right, cool. So I'm cool with this. All right, but so first TP is pretty straightforward. You pretty much just go target the low right here. So this will be first target. So I'm gonna go ahead and write this down for y'all so I can get it. I'll send this in the chat as well too. This should activate tonight for sure. Let me make sure I got it underneath that wick. All right. I like to be super precise. So first TP, what that look like? 3708. No, I'm tripping. That's the entry. 3653. Okay, about a 1.5 to 1. That's cool for a first TP. My first TP, I wanted at least to be a 1-to-1. A lot of time, I don't know how it always works like that. My TP, a lot of times, it's like exactly a 1.5 to 1. It usually just works out like that. Sometimes it'll be a 1-to-2, but it's usually like a 1-to-1, 1.5 to 1. I'm content with that for my first target. Because there's nothing else that would yeah, that's dope. All right, so let's look for our other targets. Okay, so let me put y'all on some sauce. Hey, Kevin and Wall Street, y'all might fuck with this, bro. Y'all might fuck with this. So I don't know if y'all have ever taken advantage of the matrix indicator. Once again, shout out to, this is actually one of Tyrone and Patrick Kinney's students that created this indicator. Bro, if y'all can overlook, so y'all can actually customize this to where you can only have on the chart what I'm about to show you guys. So bro, I guarantee y'all gonna love this. So the blue and the orange represent previous daily highs and lows. I think that's all I got to say for the people that understand what to do with that information. These are previous daily highs and weekly lows, bro. Literally painted on the chart, fam. So I literally use these for targets, bro. This is liquidity. Because think about it, every high and low is not necessarily from a previous day. So look, this is a previous day. So the blue is a previous daily low. The orange is a previous weekly low. So it's so you got to kind of know how to look at it. So see how this orange just like cuts through this candle. This doesn't actually count as like a low. This would be a low, right? All these would be previous lows. Okay. If it's cutting through the candle, like how you see this orange, that's not what you're looking for. You're looking for like this blue, right? So all these are previous daily lows. The blue is a previous daily low. The orange is a previous weekly low. Bro, this is like, I don't even tell that many people about this shit, bro. This is sauce, bro. When I began lazy, I just like, bro, let me see where I can look for a target. I just pulled this joint. I was like, okay, I could just target liquidity straight like that. So yeah, so y'all can definitely take advantage of that. So if y'all go look for it, where's the indicator tab? I'm gonna eventually make a YouTube video over this. MATR, how you spell it? X. There you go. MATRX right here. Now you're gonna have to kind of customize it a little bit. So just throwing it on your chart is probably not gonna look exactly like this because I've kind of custom this. When I say custom, it's more so I change the colors, kind of change. Physically, you can make this look different. So this can be like a box. This can be like, it doesn't have to be dots. So it's not gonna look exactly like mine, but yeah, I just want to kind of give y'all that sauce. So I'm gonna leave this on here so I can kind of look for some additional targets. So 1.5 to 1. This is another one. What does that look like? What is this? That's not enough. So for me too, one thing I also do whenever I'm looking for targets, I at least want to have double my previous target. So if my first target is a 1.5 to 1, I at least need my second target to be a 3 to 1. I always want my next target to at least be like double. You know what I'm saying? For the most part. But I want to find some liquidity. So it probably makes sense to target that. Let me do something real quick. This is another way I'll be looking for take profits. I basically do like the reverse fib. So I would basically do something like this. Even though I'm not looking to buy this, this can be utilized as a target. Because if you think about it, if the market is bullish and it has to retrace to keep going up, it's gonna have to pull back to this fib zone. So same concept, bro. I done found so many ways to look for targets. This shit could be a target, just like this, literally. This is a target. All these fib levels could be targets. So yeah, bro. Definitely make sure y'all work on y'all take profits because I feel like I'm pretty good with where I target. Like my targets usually get hit pretty consistently. I don't really have, oh, it came like a pip away or a few pips from my target and then reverse and hit break even. That usually doesn't happen. But like I said, I back tested a lot. So where will my second target be? I'm gonna be real. I'm gonna just put my second target at this this liquidity, this previous daily low. I could target this weekly low, but I don't want to be too stingy. So we'll do something like that. Like literally what y'all saying, bro. This is how I be finessing these targets, bro. Shit is too easy. It don't even make no damn sense. That's why I be saying I can't stand people that shit on indicators. What I say is if y'all know how to use indicators, just say that. Don't shit on it. It's kind of like whenever they like, why your stuff so expensive? It's like, well, if you're broke, just say that. I feel the same way about indicators. If you're shitting on indicators, just admit that you're not that good at using them, bro. It's okay. Don't be that person because I can destroy an indicator, bro. I'll be making indicators my, you know what I'm saying? That word. You feel me? I ain't go curse on here though. So this will be TP2. Like I said, I'm literally finding these targets in real time. It takes me a little longer to find my targets because I want to make sure it's like precise. So I can really just round this up to a 4-to-1. Okay, I like that. I like that. Cool, cool, cool. I'm liking that. Also got this imbalance up in here. So this is a nice area for it to, like become a magnet towards. And then I'm really just gonna rock with a final target somewhere down here. So I'm just gonna do 3 take profits, 1, 2, and then 3. So the way that I use this fib, I want to use one of these fib levels to find either like where it meets with an imbalance or like an institutional candle. So obviously there's a lot of imbalance in here. So I'm probably not even gonna worry about using the 61.8. I'll probably use one of these deeper ones. I'll probably just go with this 71% because this is like right at the opening of an imbalance. Yeah, I'm probably just gonna rock with that 71%. Yeah. Yep. I like it. Yeah, I'm gonna just rock with that. Okay. Let's see what this looks like towards this area. I might do that 61.8 because that's right by a previous weekly low. Let's see what that risk to reward looks like. I don't like being too selfish with my targets. I just rather my targets be hit versus me just trying to swing something too crazy. I'm gonna just target that previous weekly low, and we'll just call it a day. So I'll have 4 targets. My final target will just be targeting that low all the way at the bottom. All right. What that look like? That is, oh, I like that. And then the final target will be all the way down here because I'm gonna scroll out and show you guys it definitely has the ability to continue dropping because there's actually a lot of space below this low. So if I go to a higher time frame, like the 8-hour, yes, sir. And it says a downtrend. You guys see it's just, you know what I'm saying? So this could be a really nice swing trade. It's definitely a strong possibility. So I like this. So overall, we could be looking at a 14, almost a 14.5-to-1, about 500 plus pips on GU. So let me go ahead and type that out for you guys. And then I'll give you guys one more setup on Euro JPY and we will be done for the night because none of these other setups look like they're going to happen tonight. Okay. I bet. All right, so let's go ahead and mark this up together. So we got, and obviously I'm gonna send these out to the chat. So we got GBP USD entry. What's that? 1.37080 SL 1.37450. How many pips was that? 32, 37. The other thing too, I always add spread to my stop loss. So that's one thing. If you guys don't do, I recommend you do it. I personally always add 2 pips to the high or the low of my stop loss just to ensure that I don't get stopped out on some BS. It's definitely saved me in some crazy pullbacks. Like I've had some pullbacks that pull all the way back, but because I had that spread, I get to stay in the trade and then it goes in my favor. Don't always have super deep pullbacks, but in the instances that I do, it's definitely help your boy out. All right, so target 1.36530. What did I say that was? 1.36530. So 55 pips, 1.5 to 1. I did not mean to lock that. All right, so 55 pips, R&R, 1 to 1.5, TP2 is gonna be 1.35600. Let's see. That's gonna be 148 pips of 1 to 4, 148 pips. R&R 1 to 4. TP3 1.33840, which was 33840, 342 pips, 324 pips, about at 8. I'll just say 8.5. With 324 pips, 1 to 8.5 R&R. All right, and then swing TP is going to be that low. And obviously swing TP honestly means you should have basically taken the vast majority of all your partials by the time it hits TP3. You should have almost nothing left, because this is not guaranteed to be hit. You just want to leave like the most minimal lot size just in case if it does hit, but don't just try to hold it to something like this. Please take your partials along the way. 1.31730, and that's going to be, it was like 500 something. 31730, 535 pips for a 14. I could really just round that. I'll just round that shit. $537. All right, so 537 pips, 14.5 to 1, 537. R&R 1 to 14.5. All right. I'm gonna go ahead and drop that in the chat for you guys. I'm gonna be honest, I'm gonna just go ahead. Well, I'll officially send this out because this is not gonna activate by the time I finish this call. So I'll just send this out after we got this call. We're only gonna be on here like another 10, 15 minutes. I lost my train of thought. All right, Beth. So I'm gonna drop this in the chat for you guys. Copy link. Gonna go ahead and drop that in the Telegram. Obviously, I can get a screenshot real quick because I'm about to leave this screen shortly. All right. Cool, cool, cool. All right, so I'll leave this on the screen for like 30 seconds or so. I'm actually go ahead and set an alert for that entry. Excuse me. All right, but now I'm gonna be real. Just go ahead and put this shit in now, bro. Last thing I want is this bitch to just me forgetting it activate. Yeah, so I'm gonna just go ahead and put this in right now. So y'all go ahead and take, like a couple minutes or whatever, put this in. I'm gonna just go ahead and officially send this out in the chat. Let me actually put this trade in myself. And then, like I said, we'll talk about EJ for like 10 minutes or so. Cause like I said, Wall Street Ray actually did a great job breaking it down earlier. And I did already speak about it last week. So I don't want to take too much more of y'all time tonight. But yeah, take a few minutes to go ahead and put that in because that's what I'm finna do. So I would recommend y'all do the same with this little brief intermission. So GBP USD 37 pips stop loss. Make sure I use a lot size calculator. Shout out to the lot size calculator. That is the GOAT. Let's see. So GU, bada boom, bada bing. What is my lot size? Okay, my lot size is a bada boom, bada bing. Okay. Bet that, bet that. Got a sell limit. 1.37080. 1.37080. Stop loss is 1.37450. 1.37450, 1.37080, 1.37450. All right, cool. So I got that in. All right, bet. Got a couple brokers, so give me a second. All right, bet. Second broker. Lot size is bada boom, bada bing. GBP USD. All right. Hit them with that. And then once again, 37080, 37450. All right, so let me send this out to the chats real quick. Give me a second. Copy, go to the Discord. The Los Discordos. So send it to the Telegram, send it to the Discord, paste. I'm about to go ahead and erase this so I can get the picture. Nice, clean looking picture. And then y'all can actually see the imbalance a lot better on this 12 hours. So see that? This is where the market is reacting at right here. Type shit. Bam. Perfect. Beautiful. Absolutely beautiful. Like I said, use good risk management. Nothing is a guarantee in the market. Just gotta always repeat it. All right. Don't come for me if you end up getting your stop loss get hit and you didn't leverage the whole damn account. That is not my fault. Just saying. All right. Copy link. All right, paste. So I dropped that in there. I'm gonna also drop this in here. All right, and then let me drop this in the Discord where the trade signals, trade ideas. Wall Street actually dropped a play as well too, so y'all definitely make sure y'all take advantage of that. All right, bet. Okay. So Euro JPY. And since Wall Street already called that out, I'm only gonna send this in my personal Telegram chat. But his shit is probably the same as mine. For the most part, because I think he said he had a 12 pip stop. I got 15 pip stop, so basically the same shit. But I'm gonna just break it down. Kind of just going back over, like I said, essentially going to be the exact same setup that I went over last week, and this will be what we close off the call with. Because like I said, none of these other ones look like they're gonna happen tonight. Definitely not. Definitely not gonna happen tonight. Okay, bet I got you, bro. Appreciate you, Ray. I'll go ahead and send it then. Let's see. And if anything, shit, y'all can should take advantage of both. Split your positions, though. That's one thing you guys can do. If y'all take both trades, split your positions. I lost my train of thought. Okay, cool. So let's go ahead and end it off like this. So let's go ahead and pull up Euro JPY. I ain't gonna lie, like I'm really excited about Euro Chef. I think Euro Chef is going to be a bomb. But like I said, I don't feel like breaking this down tonight because I don't think it's gonna activate. But if y'all see this damn candle, if you know anything about anything, you already know what that's finna do. So, but like I said, I don't think that's gonna happen tonight. So I'm not gonna go over it tonight. All right, best. So Euro JPY, right? Y'all wanna know it's funny? Look, peep this. I'm about to show y'all a YouTube video. Cause Ray, I think your ass was asleep on Friday, bro. Look, peep this. I was actually trying to get your opinion on Euro JPY. I'm gonna show you this damn YouTube video so you can see this shit was hilarious. Peep this. I was like, drop in the chat, Ray, wake up. I was just comfortable with the like. I want to find this. Hold on. Starts pulling back. Wake, I ain't even tired, so I'm gonna be up regardless. I really want to find that shit. Let's go back over. I'm gonna stay up, but obviously it's and see what this will. This right. Look at the difference in risk to reward. So all that's. I don't know what you think. If you feel like talking, I don't know if you. Yeah, look. Listen, Ray. Listen, Ray. I'd definitely like to hear what you guys listen, say, bro. Listen, I think your ass was asleep, fam. I'm not. Wall Street, where you at? Y'all type in the chat. Wall Street, where you at? Cause he ain't saying nothing. Where you at, Wall Street? Don't tell me you fell asleep on the call. Type in the chat. Wall Street, where you at? Let me get y'all type in the chat. Wall Street, where you at? Yo, I'm weak, bro. Yo ass. Your ass was definitely asleep, bro. I was adamant. Because when I marked this up, bro, I was like, I saw your ass on the call. I was like, bro, give me some feedback. Your ass was knocked the fuck out, bro. That's funny as hell. But that shows dedication. My boy still plugged into my call, but yeah, your ass was out. I just wanted to show you that, bro. That shit was too damn funny. I was like, bro, Wall Street, where you at? Type in the chat. I was telling Swank. I was like, Swank, where Wall Street at, man? But yeah, man. So that's why I'm glad that you marked up the same setup, because literally, bro, when I was on the call, I was like, bro, Wall Street, how, like, unmute yourself so you can give me some feedback on this. So that means that we working in unison, bro. Shout out. Yep. Yeah, shout out to my boy Penitentiary Trader in the building. You already know, man. All right, cool. So let's go ahead and finish this off. We already been on here about an hour. I really don't want to keep y'all up too much longer. So let's go over the same concepts that we've been utilizing. All right, my 4 confirmation checklist. Overall trend of the market. So based off the 1 hour time frame, we can see that we had a structure break here. Okay. We had this high that was set that did not get violated. So what does this ultimately mean? Structure break, retracement. We maybe want to be able to see some sort of continuation, right? So if I were to take my fib from the high to the low, obviously this is not, what the hell did I just do? Obviously this is not as deep of a retracement as we've been seeing in other examples, but anything that pulls back within this actual range is deep enough to be able to look to actually take a trade, in my opinion, okay? So we actually got a retracement into that 61.8 fib level, which is valid. There is still imbalance up here, so the market, you know, possibly at some point in time could still come up here, but we're not going to worry about what could happen. We're going to focus on what has happened. So what has happened is, you know, we got that structure break. We got a retracement deep enough into the fib. Those are going to be my first 2 confirmations, trend and bias. My bias is obviously going to be a downtrend. That's why I pulled out the fib to see if we got a deep enough retracement. Now you guys know what I'm finna look for, momentum, weakness, and divergence. I don't think we had divergence on this. Actually, what I want to do is I forget the original candle I had marked up. I think it was a 6 hour. Yep, it was a 6 hour candle. So let me do this. This is originally what I had saw. Yeah, we do actually have divergence. So peep this, right? Okay. I'm telling y'all, man, this divergence is disgusting. It's absolutely filthy. Don't make no goddamn sense. Look at this shit. Man, I love divergence, bro. So look, we got divergence. This is clearly going up. In the same instance, this is clearly going down. That is showing us that the momentum is getting weaker. Now, we don't actually have that aggressive move outside of the purple box, which is what we've seen in previous examples, but we have very aggressive divergence. So I'm okay with not necessarily getting that white line poking out the purple box like how we're seeing, because the divergence, honestly, the divergence is more valid than the momentum weakening, because divergence in a sense is the momentum weakening as well. Okay. So now that we got that, I mean, shit, all we finna do is look for it. And I'm telling y'all, bro, my trader style is so simple. It don't make no sense, bro. So on the 1 hour, which is what I initially looked at it on. Oh, I'm tripping. I was looking at the 6 hour. Here we go. Here we go. I was actually looking on the wrong time frame. Okay, cool. So this divergence actually starts from all the way over here. Look at this shit, right? Which is going to be, how would I even, oh, I'm tripping. So there we go. All right, cool. So as the market continues to go up, notice how choppy the market is. This is how you guys are noticing the momentum is getting weaker, right? Notice this really strong impulsive move, but everything else after that is like really choppy. Okay, really choppy. That's how you know momentum could be getting weaker. And whenever you got this drop that broke this structure level, this retracement is what you're really looking for as far as the continuation. So once again, whenever you got this drop, okay, that broke this previous low, this ultimately was your retracement, right? Back into whatever was this candle up here. And then this is why you're now seeing the market fall off, right? So if I were to actually put these candles back on the chart, you guys can see there's actually an institutional candle right here. Pretty sure if I go to like a higher time frame, yeah. So it basically reacted off of this 2 hour bullish candle, this last move up before the down move. So this last bullish candle right here is essentially what the market is reacting from. You can This is like a Starboy. This is like a Starboy setup. He 50% this last bullish candle type shit. This is exactly the type of setups he'd be taking. Some shit like this. Yeah, that would have been perfect. I don't trade off of these like last bullish candles up, a Starboy, who I obviously learned from Steady. This is like a type of setup that he'd look for. So this is valid. So this is also another confirmation that you can see. This last bullish candle up before you had the aggressive move down, retraced, came down, broke this structure level, right? Gave a deeper retracement back into this candle, 50% exactly. And now you're seeing that really strong rejection. Okay. So from here, what I ended up doing was the same thing, bro. I'm flipping, looking for an engulfing candle. So you got one here, right? 4 hour, 5 hour, 6 hour. So I ended up finding a 6 hour candle, right? So this 6 hour candle, I initially did the same shit that I was doing, but now I'm gonna show you guys, this is what I've actually been backtesting, refining my entries. Every setup does not give me the ability to refine my entry, but the ones that I have backtested, now I actually have the confidence to take them. So the Gbp Jpy I sent out that had the 16 pip stop loss, that goes into what I'm saying. So some setups I can reduce it. Most of them is still just going to be, the bigger stop loss, which, like I said, I'm okay with because my trades be working out perfectly fine and I'm satisfied with my risk to reward. So this setup is going to be the same thing that I normally do. Okay. I don't know how deep this ended up retracing. Oh, there we go. So I would have been looking for, obviously something like this, because this is where the market currently is. So, like something like this. I don't know where it was on Friday. I think it stopped like here on Friday, but since it dropped down here, we'll just use this. So in the grand scheme of things, normally what I would have been doing is what I've been showing. I'm kind of getting lazy now since I've shown the same example like 3 times, but draw the entry zone from the opening to the 50%. In this example, there's only one fib. The other examples, there were like 2 different fib levels. So since there's only one fib, we're just going to focus on the one fib that they got. Now, this is where, like I said, I've actually been back testing and refining my entry. So this is how I would normally look to take the trade. So I could put my short position here, stop above the high, add 2 pips of spread, whatever, right? But what I've started noticing is if I start going down on the time frames, I'll just go ahead and skip all the way down to what I'm looking at. So this 30-minute candle, basically how Wall Street Ray explained it, because he explained it really good on his call earlier. Whenever you have the market, right, give you that impulse move, this right here is considered a retracement. So since the market actually gave you a retracement already, you don't actually have to look for it to come back up here. It should react off of this level at this point. Okay. So the market should simply react off of this level. Now, if you notice where my entry is off the 78%, it's already basically on this candle. It's just that my risk is based off the 6 hour candle. So what I can actually do is I can now reduce my risk to the 30-minute candle, which is obviously going to give me a better stop loss. So that's pretty much what I'm going off of. Now, like I said, Owanda, this looks different than the FXCM. If I go to the FXCM, the 78% is not actually going to be on this candle. So that's why you guys want to make sure you know. So like, obviously look at this, right? This is drastic. Oh, I'm tripping. That's because I was still using the fib from the high to the low. So yeah, so now if you're redoing the fib, right, you're no longer going to be taking the fib from this high because this high is going to represent the 6 hour candle. So you're now going to change where you're using the fib to the candle of interest, which is the 30 minutes. So if I take it from the high to the low, notice the maximum fib is the 88%, but it's not even touching the candle. So in this instance, I'm just honestly going to play it safe and just put it exactly at the opening because the max level fib is not even in this candle. So even though I feel like it's still going to touch the candle, I don't want to risk trying to get too cute and have an entry too deep in this candle if the maximum fib is already right here. So I would just rather put it at the opening of the candle so I can look to get an entry. You want to know how I know to do this? Look, I'm gonna show y'all another example. Let's go back and look at what we previously did. So if I go look at this Gbp Jpy setup that I took, similar concept. I took it off this 1 hour time frame. Okay. So if I were to take this fib from the high of this candle to the low of this candle, right? Notice how the fib, once again, the 88% fib, right, is not even in this candle. Okay, it's not even in this, it's not even touching the candle. So once again, to play it safe, I put my entry at the opening. Look at the reaction. If I would have tried to put this any deeper into this candle, the spread might have not even filled the setup. Get what I'm saying? So this is why I like utilizing the Fibonacci, because it lets me know how deep of a retracement the market is going. And if it's already maxed out and it's not even touching my candle, it doesn't make sense for me to try to put my entry deeper into the candle. I'm gonna just go with the opening. And like I said, this is based off a previous example. Look at how beautifully that worked out. Fucking beautiful. So I'm looking for the same example on Euro JPY. So instead of trying to get too cute, I'm gonna just go for the opening of that candle. Gonna put our stop above the high, add 2 pips of spread. That's why we got a 15 pip stop, right? Hopefully the market doesn't react from here, but you know, that's why I never freak out. I just let it play out. I never try to enter in early. I never am like, oh, let me go ahead and get in. I back tested my entry so well that I'm confident my entry is gonna activate. Like if it doesn't activate, it just don't activate. I never try to look for a reason to try to just go ahead and hop in. I don't trade like that. My entry is either gonna activate or it's not. There's no in between. Okay. So that's Euro JPY. To be honest, I'm gonna wait to send this out because one thing I don't like to do, I hate sending out a trade and then saying delete the trade. So I'm gonna stay up. On Wall Street, Ray already has it called out. So like how he said, at least make sure y'all put in his trade. I'm gonna still send out mine, but I'd rather wait until I actually see this candle become bullish again. Just so I don't have this sent out just to say delete it. And I already have y'all in NZD CAD and y'all already have GBP USD as well. So I don't want to just be having too many trades out there, you know, for just no damn reason. So you know, once again, this is going to be another example of a setup. And as far as the targets, you know, we got that break of structure, which is why I'm looking for that retracement. And once again, you guys see I'm utilizing the fib, right? Utilizing a bullish fib for a target area. Okay. And a target area that I'm actually looking for is basically filling in this imbalance right here, as you guys can see. So this is another perspective if you guys never thought about it, you know. I can actually move this up a little bit more. Just put it at the opening of that candle. Yeah. Just makes me feel a little more comfortable. I'll just put it at the opening of that candle. What's that? So I'm actually, see that? I'm putting my entry at the opening of one of these bullish candles. Yeah, that's perfect. I like it. I love it. I want some more of it. It's pretty much it. Yeah, because like I said, I don't think, I mean, maybe this happens tonight. I doubt it. Like I said, I'd just rather save stuff like this for tomorrow. We've already gone over fucking 3 setups. Okay. All right, guys, let me get you guys to drop some ones in the chat if you got any value from this call, because we're about to call it a night. Let me get y'all to drop some ones in the chat if y'all have taken any value from this call. And like I said, once again, I will be uploading this to my YouTube channel. So if you guys want to be able to go back over it, you guys want to revisit it, you guys want to pause it, take notes, you know, do whatever, you know, definitely do it. But one thing I want to be able to leverage is please, 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 let me show you guys exactly where I learned this from. Okay. So let's never forget, you know, the goats of this go live. So what I strongly recommend that you guys do, which I'm gonna leverage tomorrow, they don't go live tonight. Make sure y'all get the pro pack. Okay. Start tapping in to Starboy Monday through Wednesday. Start tapping in to Rob Kumar, John Dollery, as well as Zach and Jordan. Okay. So once again, Starboy, the combination of John Dollar and Rob Kumar, which usually what's going to happen. So like tomorrow, their call is immediately after my call. So I wouldn't have even still been talking because they would have already been on 20 minutes ago. I would have already ended the call, but they don't go live today. So the next 3 days, literally, as soon as y'all hop on my call, as soon as my call is done, y'all will be able to hop on their call. They're going to do a dual session. And then in the morning, if y'all wake up for New York session, y'all can take advantage of Zach and Jordan. And then Asian session, y'all can take advantage of Starboy. These are the 3 primary educators that helped me get to where I'm at. I started off with Patrick and Tyrone, which is how I learned a DeLorean, which I still use. The TDI is definitely the biggest gem that I took from that strategy, and shout out to Tyrone. So once again, if you guys want to be able to, so this indicator that I keep talking about, the TDI, right? I personally don't actually use the RSI when I'm trading by myself. I just use this for y'all because, to be honest, it's a lot going on here, and I really don't feel like explaining this. But when I'm trading like this. The RSI is down here, and I'm only using this. I only use the RSI to teach y'all. I really just use the TDI if I'm gonna be real. But if y'all want to learn the TDI, Tyrone Foster, right? I'm gonna literally show you guys what videos to watch. So Tyrone Foster. Shout out to my slow laptop. Favorite sessions. All right, bet. So if y'all want to learn the TDI, y'all need to go watch Fire Nation VBC Part 1, Fire Nation VBC Part 2. So once again, Fire Nation VBC Part 1, Fire Nation VBC Part 2. And then you guys are going to learn how to be able to use the TDI, which, like I said, smart money and the TDI for me is they go hand in hand. I can trade smart money without the TDI, but I don't think I would be as effective because there's a lot of stuff I'm not speaking on the TDI that I utilize, but I'm not going to go into all that. But with that being said, guys, as usual, you know, we've been on here for about an hour and a half. I appreciate all 10 of y'all rocking out the entire time, especially, you know, 2 of the top traders, Wall Street Ray, my boy Kevin. Shout out to my boy Penitentiary Trader. Shout out to my boy Sosa. If you guys do not know, let me just go ahead and break it down because these fellas need some credit. I have 2 individuals on my squad that are in prison. So I'm just saying all that to say, if they can get on the call, learn how to trade, they don't even necessarily have access to laptops all the time. Their majority doing a lot of this on their cell phones, on the small screen. So don't be making no excuses, right? Don't be saying what you can't, I ain't trying to hear all that shit, okay? These fellas is up. They positive. They're not making no excuses. And guess what? They're consistently paying for their membership. So you talk, oh man, bro, they're in prison and they figure out how the hell to pay the 175 every single month. So I ain't trying to hear that shit. I'm gonna be honest with you, okay? I don't give them no handouts. They'll let you know. I'm not giving them no passes. I'm not giving them no handouts. Anytime I say, hey, can you go watch this video? And I talk to them, not only did they watch the video, they're telling me what they watched from the video, and they're still asking questions, right? Definitely by far 2 of my favorite students. Just want to make sure I get them boys a shout out because they definitely deserve it. So if you guys moving forward see Penitentiary Trader and Sosa Ford on the call, just know these 2 individuals are in prison. And if they're making themselves available, staying active, learning how to trade, there's no reason why you guys cannot do the same, okay? Now, with that being said, I love you guys. I appreciate you guys. We'll be back at it same time tomorrow, 1 a.m. Central, 2 a.m. Eastern. I will upload this on my YouTube channel later today. I'm not going to upload immediately following the call. And yeah, don't do anything I wouldn't do in the market. Love, peace, and chicken grease. And I holla.